everybody, and happy Wednesday from beautiful downtown Lake Orion where the sun is shining. And it might not quite feel like summer, but it certainly is a lovely day out. I hope you are well and that your loved ones are well. And I appreciate you taking a minute with me on this Wednesday. So today I am putting a pin in a few key points about whole life insurance, otherwise known as permanent life insurance. And if I have not mentioned it before, I would urge you to jot down the name Tom Wall. He has a marvelous book that I believe is available for free for everybody called Permission to Spend. Tom Wall, Permission to Spend. Beautiful work that he did. And Tom went and got a PhD after doing all of this research on the best way to help people plan for retirement. And a key component to that, according to Tom's findings, is the whole life piece. Whole life insurance is a key way for us to diversify our retirement planning. Typical investing is often mostly in stocks in year one, and by the year 30, let's say, it's mostly in bonds. And so it starts out much more aggressively, and then as time goes on, it gets safer and safer and safer and safer. But with that, the rates of return get lower and lower and lower and lower. With whole life, you will never see the huge gains that can sometimes happen with the roller coaster market, but you will also be protected from the huge valleys that often come with the roller coaster market. And so the solution to the roller coaster market is to use it for part of our retirement planning, but not all of it, and move 2% of our income to this diversified plan into whole life insurance, and possibly also to include annuities. Whole life insurance is a conversation with the future you. It is another asset for cash available outside of the market volatility. And we often, as retirement planners, we forget that when we retire, we're actually going to want to have access to cash that we can touch and use if need be. And if we happen to want to touch cash and use it and need it on a particular year when the market is in a trough moment, that can be a problem. Whole life helps fill that void. Whole life is a way for us to hold on to our wealth. Through whole life, it gives us the ability to fund a legacy. It gives us liquid money. It gives us money for long-term care insurance. And it gives us money regardless of how old we are. And if we haven't used it all, it's going to help pass on significant amounts of wealth to our family and loved ones. If you have questions about whole life and how it can fit into your retirement planning, I am Wayne Haney, the local licensed insurance counselor in these parts. Feel free to give me a call or drop me a message. Regardless of where you actually purchase product, I'm very honored and happy to advise. Please stay safe.